What's up, guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers, so please be careful. Don't get yourself scammed. If you want up to 12 free stocks, Webull is going to give you up to 12 free stocks when you open a new Webull brokerage account. Put at least $100 in your new brokerage account. They're going to give you up to 12 free stocks for just trying out the brokerage app. You can take that $100 and start buying your favorite ETFs and your favorite individual stocks to start building wealth. There's a link down in the description box of the video. Click on that Webull link. Open up your new Webull brokerage account today. Go get that free stock. Go get that free money. I'm going to also send you a tutorial video to walk you through how to use the Webull app to make your first trade. All you got to do is send me a screenshot of your new Webull account. You can send it to my Instagram account at RichardFane28. I will send you that Webull tutorial video. That way you can get started building your wealth. There are two stages of wealth: the building stage of wealth and the enjoyment stage of wealth. And 90% of Americans are in the building stage of wealth. About 10% are in the enjoyment stage of wealth. And I recently looked at an article that said those folks that are in the enjoyment stage of wealth are starting to hoard cash. They're starting to keep at least 25 to 30% of their net worth in cash. When you're in the building stage of wealth, you have to focus all of your free financial resources on actually building wealth. The purpose of building wealth is so at some point you can control 100% of your time and you can control your own financial destiny. See, anytime you're exchanging time for money, you don't control 100% of your time. Whoever is paying you that money controls most of your time. Why? Because they're not going to pay you unless you show up and do whatever they're asking you to do in order to get that paycheck. Then you take that money and you should be investing it in assets to build wealth so that you can get to the enjoyment stage of wealth. You got to be a little bit more aggressive. I'm not saying blindly aggressive, but you got to be aggressive with your money in order to multiply it. Because you want to do three things when you're in the building stage of wealth. You want to make money, you want to keep money, and you want to multiply money, right? And the way you make money is doing what? Getting out there, using your high income skill set and earning. And then you want to keep what you earn, not taking that money and spending it on things you don't need to make other people wealthy. No, that's not what you want to do. You want to take care of your basics, right? And then you want to take the rest of that money and do number 3, which is what? Save and invest. Once you save, then you want to start investing. And the save part comes where you got to have an emergency fund, 3 to 6 months of your monthly expenses tucked away. That's the money that you save. That's for a rainy day. We call it a rainy day fund. But the rest of that money that you earn and you keep, you got to invest, guys. And you got to invest it in something that's going to give you an annual rate of return that will multiply that money. You guys know I'm big on the S&P 500 index. Why? Because over the last 90 years, on average, it's returned to investors a 7 to 10% rate of return on their money. That's why I tell people who are not so sophisticated when it comes to the stock market. And guess what, guys? I'm one of those people that are not sophisticated when it comes to the stock market. I do 2 or 3 investments, and that's how I've built my wealth. One of them is an S&P 500 ETF that tracks the S&P 500 index. So that's the first thing you should be thinking about when you're multiplying your money. If you're going to use paper assets, think about a broad-based stock market ETF or index fund that tracks the S&P 500. So that's when you're in the building stage of wealth, right? We're trying to multiply this money so that we can get to the enjoyment stage of wealth. The reason high net worth individuals are keeping so much money in cash is because they're trying to preserve their wealth. See, when you've already built your wealth and you're living off of your assets are generating passive income from you, and that's how you're funding your lifestyle. You want to go into a little bit of a preservation mode on some of that wealth. Unlike when you're in the building stage of wealth, probably 90% of your earnings that you make after you pay your necessities should be invested. On the flip side, when you're in the enjoyment stage of wealth, normally you cut that back to about 60% to 70%. And especially in times like we are right now, a lot of high net worth individuals who are in the enjoyment stage of wealth are saying, you know something, I built my wealth. I'm not going to be as aggressive because I don't have to be. Yeah, I'm going to keep a part of my net worth in the market, earning and compounding, but I'm also going to keep part of my net worth on the sidelines so that I can preserve it, so I can weather any storm that happens. Also, I want to keep some of that money on the sideline because I want to take advantage of opportunities that present themselves. But when you're a high net worth individual and you're in the enjoyment stage of wealth, you can do that because you've already built your wealth. Your wealth is already generating passive income. You have no need to be super aggressive. But someone in the building stage of wealth does need to be aggressive. Like I said, not blindly aggressive, but you need to be aggressive because you're trying to get to a point where your assets generate enough income to take care of you so you don't have to be dependent on trading time for money and having someone else control your time. What's the game plan for someone who's still in the building stage of wealth? Let's talk about some financial fundamentals we need to live by. Number one, got to live on less than what we make, right? If I'm taking in $3,000 a month in income, I got to live on $2,000 a month. I got to be able to take $1,000 a month and build wealth. Number two, got to live on a plan. Got to have a personal budget, guys. I got to be able to manage my money properly. In order to have that $1,000 a month left over to invest, I got to manage my money. And the way I manage my money is by having a personal budget that I look at periodically and make sure I'm sticking to that budget. Third thing, got to stay out of consumer debt, especially right now, guys. Interest rates are sky high. You don't want to be in a situation where you're out here with all this high interest rate debt, because that's taking money that you could be using to build wealth. So you got to stay out of high interest rate debt, consumer debt. And then number four, you got to save and invest. Like I said, the save part is your emergency fund, 3 to 6 months. Got to have it tucked away for a rainy day, just in case you hit a bump in the road. You got some money to lean on. And then guess what? You got to invest. And like I said, for 99% of us, S&P 500 ETF or index fund that tracks the S&P 500 index is all we need. We don't need anything more than that. I know we out here trying to get fancy and act like we need more, but we don't. That's all you need. That's all you need. One investment, one broad-based stock market ETF or index fund, and you're good to go for 99% of us. Why? Because you got the top 500 companies in America in that fund. How can you go wrong? You're in every industry, every sector. So that's what you should be thinking about when you're thinking about using paper assets to build your wealth. If you want them 12 free stocks from Webull, click on that link down in the description box. Open up that new Webull brokerage account, because you're going to buy paper assets, guys. ETFs, individual stocks, you need a brokerage account. And Webull is Perfect for that. Why? Because I use it every day. They don't charge me any extra fees. Really, really user friendly. And they're going to give me free stock for signing up. And they're going to give me free stock every time I refer somebody to Webull. They're going to give me more free stock. No brainer, guys. Take yourself off the sideline, put yourself in the game. You can't score any points unless you're in the game. Click on that link down in the description box and open up that Webull account today. Go get that free stock. Go get that free money. If you're stopping by the channel for the first time, please consider subscribing, share the video, smash the like button. Thoughts become things. You can see it in your mind. You can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. And I'm going to catch you on the next video. Bye. Today's video is sponsored by my company, RF Financial Consulting. And in my company, I work with individuals just like you through financial mentoring and coaching sessions. And in those 1-hour sessions, we talk about strategies to help you get to your financial freedom, whether it be through real estate investing, stock market investing, creating additional streams of income, credit card arbitrage, or starting and growing a business. If that's something that you might be interested in, there's an email address in the description box of the video. Send me an email and let's discuss if I'm the right fit for you.